Hi everyone, good evening. So today the market session was over. So firstly I will explain how I avoided the trade today and what was my criteria and everything. Then I will explain the basics of the price action. Fair value gaps and imbalance and everything is the second criteria, but with the basics of the price action itself, we can take some good trades. So yesterday also I said we are having a major character change over here. It was a gap up and the market was continuously sustaining above this range. Okay, we were only having a fair value gaps over here. Yesterday also we draw this fair value gap in which the market was continuously supporting. So today what happened? The 15-minute candle closed below this fair value gap and it became an inversion fair value gap. So whenever a fair value gap is formed or an inversion fair value gap is formed, we need a price action also. We are not looking into the fair value gaps or the inversion fair value gaps or the imbalance or the displacement. We are not looking into anything. First things first, we need to identify the character. We are having a sell side sweeping over here and a change of character, which is a good thing. This is the lower low. This is the higher high, a higher low, a lower high, higher low, higher high, and lower low. For the short entries, we know the formation is like lower high, lower low only, even though it can become a sweeping also, but it depends upon the characters and the fair value gaps or the inversion fair value gaps. So for me, the criteria for today is if the candle is closing below this fair value gap in the London session with a red candle, I'll be shorting the market and keeping my SL above this inversion fair value gap. That's all. I repeat, if the 15-minute candle is closing below the inversion FVG in the London session, I'll be shorting the market and I'll be keeping the SL over here. But unfortunately, what happened? The candle didn't close. You can see the candle didn't close below this inversion FVG. It is not a valid candle or it is like nothing. And I was just continuously waiting for the candle to close below only. I thought the market will be sweeping over here and it will be reversing again, but we didn't get any opportunities also. The concept is very simple. It is a higher high, lower low formation. It is not a short entry formation. For the short entry, I again repeat, it is a lower high, lower low formation only. Or else there is another criteria. If a 5-minute character change in a bearish setup we are getting here, we would have taken a good entry also. Okay, so what happened in the 15-minute is that a higher high, a lower low formation, a 5-minute character structure change has been happened over here. So that in the 5-minute you can see the price action is like lower low, lower high, higher low, higher high. This is a lower high and this is a higher low. It became only valid once the price was closing above this area, then forming a higher high. So what is the formation now? Higher low, higher high. We are having a character change over here. See, look at this. We are having a major sell side and the price is reversed from there, which gives us a higher low, higher high formation and a fair value gap over here in the 5-minute also. We are having a fair value gap. So as we learned, when the price was retracing back to the fair value gap and closing above is our long entry. This was our long entry and keeping our SL over here, and the target would be this high. So for now, the market looks good for the up entry. And maybe tomorrow, if this is getting swept, we will be expecting a further downside only. Or else this buy side is good for us to target till here. We don't know after that what will be happening, but till here it is a good opportunity. But I'm not sure. So that is the reason I'm just avoiding the call entries. I'll be just looking for the put entries only with a good character change, like a lower high, lower low formation. So I hope for tomorrow the trade is clear. If it is like we can expect a bounce like this only. Taking out the liquidity and a lower high, lower low formation. We need a lower high, lower low formation or something similar with a fair value gap concept for us to short the market. So I will just explain what is price action and everything for the new traders in the group. You can trade in any time frame, 5 minutes, 15 minutes, 1 hour, daily, weekly, monthly, forex or anything, options, equity, futures, everything with the price action. Price action works for everything. So the first thing, it is higher high, higher low, lower high, lower low. These are the 4 structures which we need to identify always in the market. Okay, so I will just draw a simple path example: higher low, higher high, higher low, higher high, higher low, higher high. So as we know this kind of patterns which we are seeing in the market, so I will just mark it higher high, higher low, higher low, higher high, higher low, and again and higher high. Okay, I hope this much is clear. So if the price is reacting from this higher high, taking out this higher low, is a lower low. I repeat, if this higher high is taking out this higher low, it is a lower low in which we are having a change of character over here. Okay, there's no doubt for that, and it becomes what? Lower low, lower high, lower low, lower high, lower low. Okay, lower high, lower low, lower high, lower low. If it is a major sell side area, this higher low is a major sell side area, and the market is reversing from here, this becomes as the higher high, and we don't know whether it will be creating a higher low or a further lower low. So for that only we are using the fair value gaps over here. If we are having a 5-minute or 15-minute 1 hour, it doesn't matter. The fair value gap should represent the candle. If it is a 5-minute candle, the 5-minute candle should close above. It is a 15-minute candle, you should wait for the 15-minute candle to close above this area. With the help of the Fibonacci tool, we can identify the range of the market. Like I discussed, the 0.5 above is the premium area and 0.5 below is the discount area. You can enter the trade once the 5-minute candle or 15-minute candle closes above this area and keeping an SL below this golden zone and targeting this higher high or the minus 0.382. Okay, so this is how the market works, and I will just show you one more example: higher high, a higher low, and again a higher high. So we are having a character change over here also. If the price is having more liquidity above range, we can draw another fib from here to here, or we can wait for the market to see this liquidity area, and a reversal structure is also good for us to go upside. Okay, so this is the basics of the price action, in which we are following some ICT concepts and the fair value gap in the stock market. See, every time after seeing this kind of patterns, it is like a simple steps only: lower high, lower low, higher high, higher low, higher low. No, it doesn't work like that. We are having liquidity pools all around over this area, and this area can get swept, and a reversal only the price can move upside. If the price is not having some space to move, it will be consolidating and creating a liquidity pool, then it will be moving up or down. It depends upon the market condition. So this is the basics of the price action. There are lots to study in the ICT concepts like fair value gaps, inversion fair value gaps, imbalance, Fibonacci settings, 0.5, golden zone area. So do watch continuously and try to learn the market. Just don't lose your money in the stock market. So for new members, you can try this ICT concepts in the equity market only. Kindly please avoid the options and the futures also, because it is not recommended for the newbies. So don't waste your money in the option trading. It has its own benefits and moreover a lot of disadvantages also in the side. Just try to trade in the equity with this price actions and the ICT concepts. It is much more good than the options. So I hope I will be meeting you guys after the market tomorrow session. Thank you.